4A4. No wonder I couldn't find the blasted truck. $500 starting out. Oh, no. There we go.
Yes, for it.
Damon's repair service, right?
Yes. But on top it says no.
Yeah, there we go. Alrighty, so Damon's repair service. We're going to go ahead and notice that he's got Is that correct? Am I in the right place?
Are you? We're recording.
I don't know. We are?
We're live.
Great. My online students love that about me. I'm very animated, and I'm not afraid to say, are we in the right place? Yes, okay. So we're going to go ahead and do the trial balance for 4A4, the adjustments and the adjusted trial balance. So the first thing that you need to notice is what? The fact that this is our chart of accounts. This is what we have. We have cash, $3,000 in cash. We have prepaid insurance. Hello, that's one that's an alert there, what we're going to be doing it with it. Repair supplies, repair equipment. Notice this account already has your accumulated depreciation for the equipment already here, okay? Your historical amount, and you've already been putting in the totals for your equipment repair, so you're not asked to have to try to do that. You have your accounts payable, you have your capital, how much money you put in at the beginning, revenue from repairs, not doing bad, wages expense, rent expense, advertising expense as well. So he's got this right now. So his total his total balance should be what? We have it here, $19,920 on the debit side and $19,220, $920, yes, on the credit side. So what it's asking you to do is to do then the, what? Adjustment data and the trial balance and then the worksheets, okay? And notice this is in April, so we're backtracking here. So the first one is insurance expired. Insurance expired. So here we have prepaid insurance. What do we not see here that we need to add?
Add a new column for the adjustments that are being made.
The column is here.
Prepaid insurance.
Prepaid insurance. We don't have to add a column, but you're correct. We need to go ahead and add the expense. Okay? So we need to add here the insurance expense that we're adding in. So the first thing that we're going to see is expired. That means that we used it for $600. So we're going to do what? You're going to do what here?
Credit.
Debit first. Always debit, then credit.
Yes.
Debit how much? $600 on your adjustments. Notice you're putting it here on your adjustments. $600. Then you're going to credit what? Yes, Diana, prepaid insurance. And notice we're putting A and A so that you can remember what that is for. Okay, which one you've already done. So notice what we're doing, how we're adding the adjustments. We're adding the extra accounts here, but we're actually doing the work where it says adjustments on the adjustment columns. So the next one says repair supplies on hand. On hand. We have how much repair? $4,500, right? On hand, how much do we have? $2,400. So how much was used? $2,100. So what do we need to do? On hand is how much? $2,400. So what are we going to do? We're going to show that we've used this amount, $2,100. So we're going to debit what? Repair, supply, what? Just like in the other one, it's in what? Expense, correct. So repair, supply, expense is B. So we're going to debit this for how much now? $2,100, because remember, this is on hand. This is how much we have left. This is how much is used. And yes, we have to use math here to figure out how much we're going to debit to get the amount that we have on hand. And then we credit what? The repair supplies for $2,100. Just to make sure we're correct. Okay, then the next is depreciation on repair equipment. They've already figured out their depreciation amount for us already. So what do we have to add? Do we have it here? Remember, depreciation is an expense that we're going to have first. So we're going to say depreciation expense on what? Repair equipment. So again, because the depreciation, the expense is a debit, we're going to debit that for, in our adjustment column, for $600. And now, we're going to credit, not the repair equipment, because remember, that's a historical value. We're going to then credit the accumulated depreciation for $600. I know you were gone 1 week, so that means you were gone what? A couple of days, right? And that could be weeks in accounting. So, we understand that right now. Everybody's okay? Alright. Now on D, wages earned but unpaid. So wages earned means that it's wages for your employees. So wages earned, it would be a wages what? Expense, but we don't have to add it down here because it's already in our chart of accounts. So all we're going to do is debit wage expense for how much? It's 600? No, 200.
200.
And then we're going to credit what? We don't have it here, so we have to add it, the wages payable. Now, before we go any further, we must make sure that we total these adjustments because your debits must add up to the credits as well. So you're going to add all of that. So in your debit column, you're going to have how much? How much do we have on one side? I heard a small little question over there. How much? $3,500. So you should have $3,500 on your debit column, and this should also add up to $3,500 as well. Now you know because you've checked and made sure, again, you have to check and make sure that those numbers are correct and that of course they both add up and they're correct as well. So while we're doing it in the book, in the real world, you would go refer back to your invoices, all your information to make sure that those numbers that you're adding in into your adjustments are correct. Okay? Now, once we finish that, we're going to go into what is called our adjusted trial balance. All the amounts that you're going to get, that we're going to be working with, all this right here. So, did we do anything with cash? No. So what do? You bring over the account balance into the correct column. If you start with a debit, then that's where it's going to go. We did nothing with cash, so that original account balance comes over. Now, prepaid insurance. This is the amount that we started with. This is the debit. On our adjustment, we had a credit. When you have a debit and a credit, you subtract, correct? So what is our new balance for our prepaid insurance? $4,500? Correct. Now again, the reason that we're doing that is because we're showing the fact that we're using that money to pay our insurance. Then the next one, repair supplies. Now remember, this is how much we had in inventory beforehand at the beginning of April. Now this is the end of April. Now we're showing that we only have this amount on hand. So what do? We take our balance, we subtract the amount used so that we can show that we only have the $2,400 that it says that we have on hand after taking inventory. So right now all we're doing is bringing over our balances. Repair equipment. Remember, that is a historical value. You just bring that over. We didn't do anything with it. But wait a minute. We did something with depreciation. Yes. But not with the historical value. We're doing it now with the accumulated depreciation. So here, the accumulated depreciation is already in their chart of accounts. So notice, it's on the credit side. So we've got $1,400 here, and we have $600 here on the credit side as well. So do we add or do we subtract? We add. So now this new number is what as far as the balance? We add 21 plus, 1,400 plus 600 is what? $2,000. On which side? Credit side, correct. Accounts payable. Okay? Here we go. Accounts payable. So we have the 4850 amount. Did we do anything with accounts payable?
No.
No, not that one. So what do? We bring it over to make sure that it's on the credit side. Haynes Capital, we did nothing with that. That's the historical value. So we bring it over onto the credit side as well. Revenue from repairs, money, the amount's already there, so we bring that over as well. Now here we go, wages expense. $1,800 that we started out with, we now have an additional $200. So what do we do here? Do we add or do we subtract?
Add.
We add. So now 1,800 plus the 200 is the $2,000 going into wages expense as the new balance. Rent expense. Did we do anything with that? Nope, so that comes over. Advertising expense, we did nothing with that. Now we would tend to want to stop there, but we can't. Remember, we did our adjustments. So now we have to bring over what? The insurance, what? Stuff? Exactly. We have to bring over our insurance expense. So we would add it here as a debit, right? $600. Bring it over. Repair supplies expense, $100. Bring that over. Excuse me? Oh, $2,100, sorry. I messed up there. Depreciation expense, bring that in at $600. And now we're going to go ahead and put in the $200 of our wages payable. But that goes on, remember, the credit side. So I have to put that in onto the credit side. Now, after we've done this adjusted trial balance, we now have to make sure again, with all our accounts updated, we must make sure that we balance out again. And it's going to be a different number because now we've added some. So, we total these two up, and what do we end up with? A number, I know. Love that. But what's it going to be? $20,720 on both sides. Now we're not done. Now that we've done the adjusted trial balance on the worksheet, we are now going to work out our income statement. What does our income statement have? Only revenue and expenses. So you're going to bring over into the worksheet revenue and expenses in their correct areas. So revenue should be where? Those are our revenue from repairs. That's $9,500, right? Bring it over. Then all the expenses. But we're going to put those on the debit side, correct? Wages, $2,000. Rent, $700. Advertising, $320. Are we done? Of course not. From the adjustment, $600 for insurance, repair supplies expense, depreciation expense, and wages payable? No. Wages payable is a liability. Remember, we're just using expenses. So, that's it for now. So what are we going to do now? Total. We need to find out what the total is of our expenses. And then subtract it from our revenue. So we put our revenue here. What's our total for our expenses? Yes, $6,320. Now what do we do to find out whether we made any income or not? You subtract your expenses from your revenue. Did we make money? Just by seeing it and eyeballing it, did we make money? Not a lot, but we made money. We covered our expenses, plus we had what is considered a profit of how much? 3,000 and something, right? How much? $3,000 what? 180. Now, of course, to make sure that you're checking it, if you add these two, you total up back to the $9,500. Yes. In the worksheet, yes. Okay, now we're going to go to the balance sheet. The balance sheet of the worksheet. Okay? What do we have in a balance sheet? We're balancing what?
Pretty much everything else.
Pretty much everything else, yes. Which is your what? What do we not use? Cash, all your assets, and what?
Liabilities and orders equity.
There you go. So you bring those over. Your prepaid insurance, your repair supplies. Question, do we bring over the, oh, you already added. Accumulated depreciation, yes. Bring it over. And what else? Accounts payable, your capital, And that's what? And your capital account, your accounts payable. But is there another accounts payable that we have to put in as well? From our adjusting? The wages payable. We have to remember that one. Always refer back to anything that we may have adjusted that we've got to bring in. It goes into the balance sheet. So now we're going to total this out as well. And you're going to notice that for the worksheet, more than likely, you will not balance. But why? I'll show you. Just total amount. Make sure that we've got the correct amount here so far. Remember, this is just for the balance sheet of the worksheet. Making sure that everything is going to be on track. So what are our totals on the debit side? What?
14,400.
14,400. And what is it on the credit side? Don't freak out, you will be short. Not physically, but you're going to be short in monies. Okay?
11,020.
11,020. 220. Yes. Now, if you subtract your debits from your credits, guess what? You're going to come up with what? That amount. So if you add your net income here, you're going to balance out. This is another way to check and make sure that all your numbers, everything that you've done is correct. This is the balance sheet of the worksheet. This is just making sure that the trial balance, the adjustments that you've made, the adjusting trial balance, the income statement is all balancing out. Then you're going to take this information and you're going to create the income statement. So let's go ahead and work on the income statement. So now, and first save this por favor. Make sure that that's saved. Because you could go ahead and have a clear day in Texas and poof, everything's gone.
You know why that happened, right?
What?
Why we had the electric outage
When?
the past semester?
What happened?
The ACs.
Huh?
The AC?
It
No?
was the company itself.
Company? Doing brownouts?
I don't know what, but like the
Their AC
company
broke?
itself, there was a problem with the company. And then
AEP?
Huh?
AEP? Yeah.
And then the semester before that, when we had a random outage again, that was because of the palm tree leak with the
Transformer, it blew up. Yep. So much fun.
Like how?
I remember right now we've had a lot of wind. We've had lots of wind, very little rain. So all that dust is now accumulated into the transformers around the lines, around the areas. Small amount of rain that we're going to have and water and dirt make what? Mud.
Rust.
Again. So be careful. Make sure that you're constantly saving. Okay? Because you never know. We could have a beautiful day, South Texas day. Minimal breeze, right? The clouds are out, the sun is shining, the birds are chirping, and then all of a sudden, poof, nada. We don't know why. So always make sure that you save. So now that we finish this, we're going to go into the income statement. Income statement, then. We first need to set it up. What goes into the income statement? I can't remember. Go back to page 46 on your book. So on page 46, we show that we're supposed to have revenue, right? Formatted. Revenue. So we made our revenue from what? From what? Repairs. What kind of repairs? Does it just say repairs?
Repair service.
Okay, so revenue from repairs. So we're just gonna say repairs, right? We're first setting it up. We're not gonna put the amounts yet. We're just setting it up. Then skip a line. Now you're gonna go ahead and put your company's operating expenses. Remember, it's operating expenses because those deal directly with the company. In the income statement, you do not put withdrawals at all. It's just the expenses. So what expenses do we have? And?
Repair supplies.
Yep, we have wages, we have rent, advertising, insurance, repair supplies, expenses, and remember, you also have the depreciation expense as well. That is considered an expense because you're taking the value away from that historical equipment that you're using. So we're just setting it up. So let's put it in. And then you're going to have your total. Total operating expenses. Expenses?
That's right.
That's right.
Expenses.
Kevin, Phil. I need your help.
They need to learn English first.
They don't know English first.
Only word they know is banana.
Banana. And, ooh.
Mm.
Alright, so now what we're going to do is remember, on this income statement, you're also going to put in the fact that we're going to see whether or not we made an income. So it should say net income or net loss. We've already seen from the worksheet that we made a profit. So we're going to put in net income. If from the worksheet you see that we've lost money, then of course on the financial statement you would put net loss or net income loss. Okay? Boom. Alright, so here we go. So now, how much was our repairs? Now remember the format. You're going to put your revenue on the left-hand side. And how much is that? Oh, this is the right side, sorry. I can't tell. Yes, I'm dyslexic and you can't spell. Together we make a very good person, okay? Alright, so here we go. We're going to put in our repairs. So we have how much? Yeah.
One way to fix these numbers, if you get these numbers, you're going to highlight all this. You're going to go ahead and press Home tab. See where it says number up here? Hit the drop down arrow, scroll down and hit text. So it'll just show it as is. Whatever you type in there is what will show.
So that's $9,500 worth of repairs. Please remember to watch out for your zeros. If you don't want to use this column, that's fine. But make sure that you still go ahead and use this amount right here, okay, on your zeros. Now, on your operating expenses, start bringing over from your worksheet what these expense amounts were from your what? You get right there from all the stuff that you've made already, all the information that you have. Either your income statement or you can bring them in from your trial balance. But here on your income statement works very well. Now, there's a trick to this, right? But you have to first make sure. Hold on. Don't do it yet. Notice you can bring these over if you highlight it. However, there's a space here.
Control.
right? So you have to make sure that you bring over just the amounts that you're going to need. So the first one are wages, rent, and advertising. So if that's what you have, you can copy, right?
Control.
Go here, and what? Paste. You can also use Control what? C, and then Control V.
Sure.
Sure. Then we're going to bring in what? The rest. The only thing you have to make sure when you're bringing them in is that it's correct, right? That you have the correct amounts coming in. So we're going to add these up, and we should come up with the same amount that we did in the balance. It'll come to me in the worksheet, which was how much?
62.
Yes. 63, $600, $320. So then when we subtract this, guess what? Our net income is going to be what? The 3,180. How do I know that this is correct? How can I check? Go back to your worksheet. Voila. You can do magic. No, I'm kidding. You probably never heard that song anyway. Diana has. Nobody else. That's so sad.
Siri, what was she singing?
Oh my gosh. Siri's gonna say, that was singing. So again, we can check it there. Now, save. Then you're gonna go to your owner's equity, right? Because that's next. We set it up. Owner's equity, what are we gonna put in? Your capital. So you're gonna put in the fact that this is who? Damon. D-A-M-O-N repairs, service capital, or just Damon's capital. Or capital Damon, however you want to say it. Mira, it's that guy.
For the month of?
For the month of April. That's how much, that's what month we're working on. Then we're going to put in, after that, we're going to show net income. We know that there was a net income. So we're going to say net income for the month of April. Again. She did not have any withdrawals that we know of. Did she? Did he? She? Whatever? No. Smart cookie. Then you're going to show the increase in capital. The only reason that I can say that we're going to show an increase in capital is because we had a net income for April. And then you're going to have Damon capital for the end of April, which is going to be April 30th. And that's going to be the total. So, his original capital goes on which side? It goes on which side? It goes onto the right side. And how much was that? Go to the worksheet. 4,170, correct? On that side. Here we go. We got to fix that again. Now, how much money did he make? We take that from where? The income statement. How much did he make? 3,180. We put this on this side. Less withdrawals. Did he have any withdrawals? No. So increase in capital was, on this side, 3,180. So now as capital, because we're adding, is what? oh no. Yeah, 7350. Same. That's the income statement. See where we're getting all our information from? Yes? Alright, then we have now the formal balance sheet, not the balance sheet for the worksheet, but the formal balance sheet that we use at the end of the month. So we're going to put all our assets here. What are the assets that he's got? He's got cash, prepaid insurance, repair supplies, repair equipment, but there's something different that we're going to add here. Notice that we have the depreciation. We're going to show the decrease of his asset in the balance sheet. That's a new one that we're adding to the balance sheet. So the way it's supposed to look is this way. So let's put our cash in first. Let's just format it. Cash. Then we have prepaid insurance, repair supplies, repair equipment, and then we have less accumulated depreciation. We're just setting it up so that our total assets would be somewhere down here. Now remember, liabilities plus owner's equity. What liabilities does he have? He's got two. He's got accounts payable and wages payable. We're not putting any amounts yet. We're just formatting this formal statement. Oh, and if you have questions, don't call me, call him. Ha! That's a lie. You can contact me whenever you want to.
Yeah.
Except at about 1:30. I'm just getting into my REM sleep right there. Then you're also going to put in owner's equity. And then at the end, it'll be total. Okay? So now, total liabilities and owner's equity. But we're just going to put total right now. Okay? So, cash. What's the end balance for cash? The account. How much money do we have? $3,000.
Alright. Mm-hmm.
Oh, here we go. Bigs it. For prepaid insurance, we have how much? $4,500. Repair supplies. Remember, the repair supplies were the ones that we had on hand. How much did we end up with? Yep. 2,400, correct. Now, the historical value of the repair equipment. Notice that we're going to go and use this side to figure out our equation. So the historical value is $4,500 of that repair equipment. You're taking out the less accumulated depreciation equipment, okay? The amount that we're decreasing it by as of this month, which is $2,000. So we put in those parentheses there to indicate and show that you're going to subtract that from the repair equipment to show now what its current value is. So you're going to end up putting in the total of what? $2,500 here on this end, showing what our current value is of that repair equipment. Now we're going to total this amount, and we should come up with what? How much?
12,400.
Yes, 12,400. Now, this is different from the balance sheet that's in the worksheet. Let's go look at the worksheet. This is the formal statement. The balance sheet here, 14,000. Why?
Because we didn't take off the 2,000.
Correct. We didn't take out the less depreciation. And remember, all we're doing here is balancing out what? The worksheet itself. The formal balance statement is completely different. Okay? Don't get confused with those two. But if you were to take out the depreciation, would we balance? The depreciation is how much? How much? 2,000. If you took the 2,000 out, then what? You'd end up with the $12,400 on the.
Wait, isn't it? So, didn't we take it out?
No,
Well, not in the
not
balance
really.
sheet.
Not in the
worksheet.
balance.
Oh, okay.
Yeah, not in the balance sheet of the worksheet. But if you were to take out the depreciation, then you would balance in the formal balance sheet. Okay? Don't get confused.
And now the other thing that's missing between the worksheet and the formal financial statements is basically the statement of owner's equity. Because you notice how we went from income statement straight to the balance sheet on the worksheet.
Correct.
You always, within the formal financial statements, you always do income statement first, owner's equity second, balance sheet third. Because they need each other. You need to take
Right.
the net income out of your income statement, take that over to the statement of owner's equity financial statement, use that in here to find your new capital, and then you take your new capital and throw it into the balance sheet, the formal balance sheet.
Formal balance sheet. Okay, so this is the number that we need to come up with on the liabilities and owner's equity side so that the formula is correct. So how much do we have in accounts payable? Remember, we're going to add these two, so we're going to start on this end. So how much do we have in accounts payable?
4,800.
Yep, 4,850. Wages payable was what much? 200? Yep, $200.
And it
Our total is?
I don't know, teacher.
5,050. Owner's equity capital. Which owner's equity capital do we take? Remember, the owner's equity, right? But we take the one from the, which one?
The statement.
From the statement of owner's equity. We take that information. This is our new owner's equity. So we put that in. And voila. We add. We do magic again. And come up with $12,400. Save. Any questions? Pretty straightforward until you get home and you try to do it on your own, right?
Like, what did they say?
That's what Fridays are for.
All right, which one is the daily activity?